Hi traders, welcome to Profiling to Profit, the week ahead in futures. It is July 17th, 2016. We're just a few hours before the Globex Open here on Sunday. Just wanted to get a quick video out to you. Last week obviously was another continuation of the week prior, gap and goes all day or all week long. We'll get into that in just a second. Let's take a look at the upcoming economic calendar. Here in the United States, pretty quiet. We don't have a lot of speakers, actually don't have any speakers, and just the normal news on a weekly and monthly basis that's out this week. So pretty quiet here. Overseas, though, we do have a fairly big announcement out of Europe. The ECB will have an interest rate decision on Thursday, July 21st, and of course Mario will be speaking shortly after that. That is most likely going to be a market mover, especially in the euro. And of course the euro is setting up, and there is some areas of interest for us there, so we'll take a look at those here shortly. Last week, as I mentioned, it was up, up, up. Now it doesn't look like, looks like a fairly balanced week here. However, after the Brexit vote, we got slammed down into our zone. We had another zone up here just above here. I took it away, and most likely if you took this trade or got if you got triggered into the trade, you were stopped out. However, we never got triggered into it because we kept gapping up. So it just depends on your trigger and how you manage the risk on this. So you can see here after the Brexit votes, we gap, 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 gap. And again, here we were gapping up. We gapped up, sold off a little bit, gapped up, sold off a little bit, gapped up, sold off a little bit, which gave us a balanced area. So what about now? Well, now what we're looking at is listen, for the bulls to stay in control, they got to keep it above this 44.51 down into that 44.36. If not, we could slide down into the 43.22 area, which is the point of control of the larger profile there. So we're watching this area right now. This is an area where they need to maintain control of this, and then we could see more upside. So I want to see movement down into this area before I put any hard-earned money on the line here. As far as shorts are concerned, just have to watch the normal profile trade. If they pop it up next week and then bring it back into this range, there's a chance we could roll it over off of there. But I'm not going to set that up. That's not a zone for us. And this video is more about zones and areas of opportunity with risk control. And this would be it for now to the upside. Now remember, guys, the path of least resistance is to the upside. One thing I do want to take a look at is we do have some divergence happening among the indexes again. As you can see here, we have some all-time highs at 47.39 here. Let's go back and look at the weekly chart. And up here at 47.39, we're currently trading in that 50, it looks like a 46 area was the high. Let's go back and look at what the high was on last week. So our high last week is around that 46.05 area, so we're quite a ways off of that. We still haven't taken out the new highs. So if we go back and look at the ES has made new highs. Now, there's a lot of speculation on why this is happening. You could say that it's like the bond market. A lot of money has been running into the bond market and driving down the interest rates here in America. And why is that? The interest rates are terrible, right? And the coupons are terrible on it. So, well, listen, even though they're terrible, they're better than a lot of other countries that are giving negative interest rates, and so they're putting their money somewhere to play, and that somewhere has to be, or it tends to be, the United States. Well, the same could be said about the equities. We could be seeing money movement into the equities because of dividends. The dividends are pretty good on some of these products, and because of that, people could be putting money into those products to receive the dividend, which is better than the bond market or going overseas and investing in other types of bonds. So it's speculation. Nobody knows 100% for sure why the markets are continuing to go up or why the ES has made all-time new highs and the NASDAQs have not. Of course, the NASDAQ is more tech driven, so we need the techs, mostly the FANG stocks, to be able to drive that up, and right now they're just not performing very well. So we do have the ES making new highs, similar to what we saw in the NASDAQ. We want to see this zone hold for the bulls to maintain control, 2106 to 21 or actually 2098. You can just might as well say 2100 area right there. Below that, obviously, this POC is a magnet. There could be now a lot of back and fill in here before they make a new attempt at highs. 2180 is a big target to the upside. That's in close proximity, so that could get hit first before they start back and filling in here. Now the Russell as well is also in divergence with everything. If we go back and look at the Russell on a longer term chart, we see that the Russell's high is 1292. We're nowhere close to that. We're about 90 points off of that. So huge divergences there in the indexes. Now, is that something you can trade off of? No, it's something to be aware of is what it is. Understand that these other markets are not participating in new highs, and that could either drag the ES down eventually, or if it's strong enough, the ES could drag all the markets up too. So with the Russell, very bullish pattern here. It went up and of course it consolidated. You got a P pattern here, which is fairly bullish in the market profile scene. And of course, right now the main line in the sand here is 1146 to 1132. If bulls want this to continue going up, they got to hold this pattern here. I don't have anything to the upside as far as zone to get short in. So right now we're just the path of least resistance is still to the upside. I want to see movement down into here and this hold before we get involved in it though. All right, let's go take a look at gold. Gold's been interesting. It's it did exactly what we thought it would do. Went up. It didn't quite hit the target that we thought it would do on an intraday basis, 1393. It did sell off quite a bit last week after making some new highs at 1375 intraday. And of course now we're looking for this zone. We've been looking for this zone for quite some time. This is the area for us of interest to get long again. I think the path of least resistance is to the long side right now. We'll just keep an eye on this risk down below here. If they start trading below this risk zone, then of course the POC at 1242 becomes a magnet. We just have to watch that. Let's take a look at the dollar and just see what the dollar is doing. Dollar is consolidating. Now, why is it consolidating? It looks a lot like the euro. Let's take a look at the euro here in a second, but this is consolidating up here. It's waiting on the euro right now. Why? Because Draghi is going to be talking this week, and guess what? They're going to make a decision on interest rates. And when that happens, obviously these two products are inverse of one another. And so we have to watch what they're going to do. One looks like it wants to break down, one looks like it wants to break up. However, what we see here on the euro, we found these zones that we mentioned last week. We're watching these, and we're still watching these. We think these are good risk zones up here. We see some down here at 1008.28 into that 108.28 into that 108.63, and then up above around the 113.18 into that 113.53. And guys, when I say these zones, these are not exact zones. Trading's not an exact science. Just understand where the zones lie, and they're based on volume and price. Okay, you can see here on the larger profile we have volume spikes, and then of course on a shorter profile it runs in line with that, and also a POC, and we have this sort of a down channel, if you will. So when you have all of those coming together, that's a nice zone area. And the same thing down below here, we have a POC down here, we have a lower profile, or excuse me, volume profile area here, and then of course we have a lower value area low, and of course coming back over, you'll notice we have some volume back over on a weekly many moons ago. So those how we derive a lot of our areas of interest. And again, they're areas of interest. We don't know if they're going to hold. We always have an area, and based on that area we use triggers, and we can control our risk based off of that and give us a nice opportunity to get involved in a trade that could pay us very well. So watch the euro this coming week. Obviously Thursday is going to be big. We suspect there'll be a couple small moves early, and then of course Draghi will make it go the rest of the way. Now, as far as what we just talked about, small risk and big gains, let's take a look at oil. That has been paying us very nicely here. We had identified the zone up here, and if you were short in that zone, we hit obviously the big target down here at 45 even. From that, let's just say average 50 area. So you had a very small risk to have a very nice trade here, almost a multiple of 5. We're still targeting the 43 area. Now we did identify this area up and around that 46.50 area into the 47 area. We said this was a zone we'd watch if you had not participated in that opportunity, and of course it held. The high was 46.92. So if you got the trigger off of that, which it should have triggered, you had an opportunity to lock some profit in, and of course pull your stop. Now we don't know if this is going to gap up and continue upward, or if it's going to gap down and continue down to 43. Right now it's a matter of managing the trade. However, this one has been working out very well for us. All right, let's go and take a look at the bonds and the notes. We'll take a look at the notes here. Notes did exactly what we were looking for, almost too good. Well, it was too good because we weren't able to get into the trade. So when we talked last time, we thought, okay, we had this very balanced area here. It was actually really balanced, and we thought this may gap up. The ideal situation would have been a gap up, take out the highs at 34.06, touch the zone, and then roll back over into the previous week's area, and then continue to sell off. Trading is not a perfect world, guys, so you have to understand that that's not always going to happen. So what we did is we said, okay, the other aspect is if we open up inside this range and it bounces around and breaks down, this gives us a trigger short. Our risk is just above this zone. Of course, we opened up at the lower part of that zone. It just poked its head up for a very short period of time, and then just absolutely got annihilated, and it hit the first 2 targets there. We were not able to get in the trade because it didn't trigger for us. If you were aggressive, and it would take a very aggressive trader to take that trade in there, if you were aggressive and your stops were still above the zone, you have a phenomenal trade. Next target down here would be 130.27. Same thing with the bonds. The bonds are in the same boat. We didn't trade any bonds, of course. We don't trade a lot of bonds. It's mostly the notes. The bonds actually opened up at the top half of their previous week's range and then sold off immediately. So they may have had a better chance of getting an entry on that. So let's also take a look at corn this week. Corn had the report out. The USDA report is really a weird report. It's sort of a flat report, which sent corn skyrocketing, and of course it just sold off huge after that. So we do have sort of an area that needs to get cleaned up on this 2 weeks ago on this profile at $3.46. I don't know if this gets cleaned up this week or not. We'll see if they can continue to sell it off. There is some serious heat coming into the Midwest here in the United States, well over 100 degrees in temperatures, right in the Corn Belt. So we don't know if that's going to have effect on it. Right now, water is ample. Corn looks very good right now. Anywhere you go, it looks great. We're just going to have to wait and see how things are going to shake out now that we're getting closer to the harvest season. Harvest season should start here, looks like in about another month and a half. So right now we're sitting on the sidelines just watching corn. There's really nothing, any areas of interest that we can really control our risk. We'll have to wait till this report settles out and we start to get some direction. But I suspect we'll go down and test that $3.46 area, and maybe poke down here and start to develop some balance down below there. But we never know. That's a guess. We don't have, again, we're not trading off of guessing. It's no good. I'm just looking at what what we've seen in the past, how the grains work. And if you're not a grains trader, just take it with a grain of salt. This is probably not something you want to deal with. Your grains are great trade, by the way. They're not affected by economic news of the equities. They're just more of a supply and demand situation, and it relies still heavily on what the producers are thinking and feeling, and of course what the USDA is reporting to. So, all right. As far as that's concerned, let's go look at our last one, which is Goldie. Goldie, we already looked at Goldie. I apologize. So with that, guys, I think that's all we have this week. If you just want to say, if you guys have any markets you want to take a look at and have us take a look at and find some areas of interest, even though we may not trade those specific markets, we will definitely take a look at them for you. Also, guys, if you need some help or struggling or just want some refreshers, go back over to the website at marketprofiletradingacademy.com and pull up the resources, free resources tab up here at the top. And we have loads of these resources for you. We have things on psychology. We have all these videos. We had Matt put out a nice video on cognitive dissonance this week. Had a nice webinar about just the general information of the futures. It always surprised me when we talk to people how little they know about futures, but they trade them. So it's good to get an idea of what you're actually trading and have an understanding of them. And then, of course, anything else that you need here on the right side of the website. We do have a free ebook. It's awesome. It's free. We're not going to spam you. We're not going to bug you. Just go ahead and throw your email address in there and then get the 7 secrets to trading success. It will definitely help you out. Otherwise, have a great week. Watch your news this week. Hope your trading goes well, and we will talk to you next week. Take care.